What's going on, everyone? I hope you're well and doing great on this Wednesday as we get ready to get started for our live session here together. This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. It's Wednesday. I hope you all are well and doing great. Getting ready over here, take a look at the markets and do what we do best, and that is bring as much clarity as possible. We put the work in each and every day. You are invited to join us if you like. By the way, tomorrow, potentially, we might not be live. I will let you know through Twitter. If you're not following me on Twitter, there's a link below in the description. I'll also let you know through the YouTube community tab. I'm headed up to the mountains. I'm going to be meeting up with CTM, and we're going to be taking a look at markets together in person. So whether or not we could be here tomorrow live, that's still questionable. Today, we got a lot going on in the markets, right? We just saw OPEC came out with a historic $2 billion output cut. That is coupled with, we're going to have to look at oil. We were looking at oil yesterday. Is anyone curious right now? We're going to be getting into today the second phase of a bear market. We're going to be looking at how long that potentially lasts, as well as what the third phase may look like. Before we do, I just want to get our bearings and make sure that we have an understanding of what's happening around us. We could see on the news, right, of this historic $2 billion output cut a day from OPEC. By the way, right now we have an extra 1 million barrels a day being put out there on the market as the strategic petroleum reserves are depleted, emptied. Got to do whatever you could do to win an election. Nevertheless, once that extra output is taken off the market, and then all of a sudden you're subtracting $2 million a day, even with the global slowdown, all of a sudden the dynamics of the market are changing. This, by the way, NPS could cause some significant inflation going forward. All right. China, right? It's been on lockdown, complete slowdown of oil demand. If they start coming online, expect very quickly we could see a sharp rise in crude oil prices. We have been watching the turn on commodities. We've been watching the turn on energy. We're able to see that headline inflation would come up because of it. It was only headline inflation. We saw all the rest of the elements of the last CPI last month showing that inflation was continuing to rise. If energy rolls over and begins an ascent towards its new yearly highs, that could present a significant problem going forward. But that's kind of going to align with the third phase of a bear market and the drawn out fundamental downtrend. Now, normally during a bear market, you will see oil price coming off. If in this unprecedented times we're in, we start seeing during a global slowdown, a global recession, oil prices rising because of simple supply-demand dynamics, that could be very worrisome as inflation will continue to rise, and the Fed could honestly only do so much. We know, the Fed knows, that really they can't control any of the supply side. All they can do is control the demand side, and they could try to go ahead and crush demand all they want. But the truth is that they are limited on what they could do, because the thing is that markets could break. Anyway, let's get going. We're watching the initial reaction off of WTI. And Kevin, what's going on this morning? I hope you're well on this Wednesday as we get going here today. And we see oil's initial reaction. And look at technically, it's so beautiful. We'll talk about that. Is up so far 1%. We'll see where it ends up at the end of the day. Obviously, I do not know. I really wanted to actually get involved in this trade. Unfortunately, I'm gonna have to really get at my wife that we were traveling on Monday and I was away from my desk and I missed the entry over here. This is a 1 hour time frame. Let me go to a higher time frame. Let me come to a 2 hour time frame. I hope you could get the subtle humor in that. Obviously, we're usually hanging out on higher time frames, mostly the 8 hour daily time frame. I'm jumping down to the 2 hour time frame so that you could see really what's going on over here structurally. So let me zoom out, and we have this trend line. This trend line was here. We were watching this trend line together, and then we had the breakout of said trend line. Breakout, and then price comes in for a perfect retest, right? And then it resumes up, and it resumed up right over there. Let me go ahead and take away this one, right? As price resumes up over here, it comes back in. Structurally, this is so beautiful. It comes in for another retest and then resumes off of that. And it then comes out through. I'm going to zoom out just so you can see where we're coming to. This is the June high. By the way, CTM was able to go ahead and get this sell impulse over here. This is when people were expecting significantly higher oil prices. We were just watching what's happening and trying our best to stay on the right side. And it's now over here. I missed this entry, but over here, now finally going back and looking for an opportunity back towards the trend. It's a significant difference than getting pulled in, sucked in, suckered in, all the way up over here, and now looking for a good trade based off of the fundamentals. Check. But people over here, Jord, they were telling me, and these were energy experts, were telling me that because of the physical oil market, that we should be looking at higher oil prices. Either which way, here we are today. I wish I got this entry. I sincerely do. I'm not, and I still didn't get into the trade because I didn't know what OPEC was going to do this morning. My gut was that they were going to actually cut output by 1.5 million. They came out with 2 million. I didn't want to be getting involved in a trade before such an unknown variable. So I'm on the sidelines. If at any point I enter this trade, I'll let you all know. I'm watching it, I'm stalking it, but I'm doing it like a predator. I'm just not running out a herd of gazelles and hoping to get in and hoping that I get lucky. I'm waiting to see if things align, if the stars align. And right now, I'm not going to FOMO in after. Right now, I'm behind. I missed my entry, the one that I would have liked to have been involved with. So I continue to watch the market, and I'm going to watch the market until said opportunity either presents itself or it doesn't. The thing is, it's the markets. The markets are always going to be here, and there's always opportunity. And there is always opportunity. After the clean breakout of that trend line up here, right? Price came back in, and then what? It again, you could see the sloping trend line. It retested it, and now is resuming off. All right? So it's beautiful to see. It's beautiful to watch, and it's beautiful to understand the market structure. I know we pointed it out last week. Just let me go ahead and just reaffirm one more time. The whole key of technical analysis is being able to find out levels that you can manage your risk around. If you view it from that lens, from that perspective, you're going to wind up going a lot further. It's really, really beautiful. Could we line up a breakdown trend line? Yes. Juan, I think we'll start simple, right? And we're going to go ahead and we're going to connect this low wick over here. Now, I'm going to skip that wick, Juan. I'm going to show you why. I was able to do it visually, but coming off the bottom wick to over here where price was able to stabilize, and over here I have a pretty clean trend line. I'm going to go like that, and that right there, Juan, would be where we were seeing some type of breakdown. That was great awareness over there. Want to be watching both sides. Both sides. The Saudi oil Fed might make a move soon. What's interesting over here is seeing, we know that President Biden, he flew out, he made the journey all the way to the Saudi Arabia, all the way to the kingdom, right? He pounded the prince, right? And he was like, please, could you help us? Please, could you help us? Please, could you help us? And right here today, the Saudis are actually turning the other way. And they are saying, you know what? Actually, I like these guys over there at the Russians. I like the Chinese. And we are seeing new dynamics taking place right now. So, and then what's going on and notice, just the last thing I want to leave you all with here. I'm not FOMOing in, right? My entry should have been and would be down here, And I would right now be very comfortable into a trade to see if it had the opportunity to run or not. I'm not going to get it up over here. That doesn't mean that I'm waiting for it to come back down in order to get into the trade. I'm just waiting for the dust to settle over here. I don't really know how the market is going to digest everything that is happening right here today. And I don't know if Friday's jobs numbers are more important and which one the market is going to give more, let's say, focus on. And I don't know what's going to happen next week when we have the CPI. And I'm waiting for further clarity. Again, I missed the right entry, and this entry I would have taken all day long. So now I wait on the sidelines. And again, this trade could get away from me. And if it gets away from me, it gets away from me. There's always opportunity out there. So great to see you all here this morning. If you enjoy being here together at any point in time, please go ahead and hit the like button. It supports the channel. It helps with the Google algorithm, and I'm really grateful for it. If you feel so inclined, if you do learn something at any point as well, please go ahead and do the same. Let's take a look at what's going on. Let's jump over to the Bitcoin. And we saw yesterday, looking at the linear scale, we saw that breakout from connecting the all-time high to the March into April high. And then again, we touched again in September. Fourth time was the charm, breaking out over here. And now so far, thus technically just coming in for a retest. Markets have a lot to digest this morning with OPEC's $2 million a barrel of output cut. It's a big deal. And rightfully so, by the way, that they're acting like that, in my opinion. Checking it out on the log scale, some more important resistance, I believe, is up ahead. It's this trend line over here. It's connecting the same lines, the same points, but on log scale. And again, we talked about yesterday, if we're able to get some follow through, it might take a lot of people into the market. This might be actually giving people a technical reason to get in and buy the Bitcoin. And the reason it's a good area is because you're able, again, to manage your risk well off of it, whether your stop loss is over here off that last swing low before the breakout of the trend line, or it's the last, let's say, this is not the yearly low, the last low prior to that one. What else? Let's take a look around over here. We have Bitcoin right now currently at entry, an entry that took place yesterday. You can see over here, Juan, you were looking at the breakdown on oil. On the right, this would signal a potential breakdown occurring on Bitcoin, likely take out last week's low, and then potentially look to challenge the June low on Bitcoin. You're looking at Ethereum's a lot different, by the way. Ethereum never triggered a buy signal yet. Ethereum post-merge has been lagging. And then you could see over here that why this is not yet a sell signal. In a couple of hours, we could be entering a sell on Bitcoin, on Ethereum, getting ready over here. And then what you have happening in that case would be a hedge. Bitcoin would be holding a long position. Ethereum would be taking a short position. And it's what I call or refer to as the beautiful dance between them, as together they're able to maneuver so magnificently the markets. It's really beautiful to watch and see in real time. Where could I find the log scale chart? All you need to do is jump down over here, sold with the dollar sign, and just click on log. You want to go from linear, and then if you click on that, you're onto a log scale. That's all you need to do is to get the log scale. Jumping over, let's take a look at the equity markets. Before we do, I need to get our bearings, right? Let me jump back over and find out where we're looking over here and just get a rundown over here what's happening on the NASDAQ. So we'll look at the NASDAQ. We'll look at the S&P, take a quick look at the dollar, the 10-year, and then we'll get further into today's presentation. Let's clean up the chart a little bit, right? We don't need that anymore. And we don't need that. And then let's see what's going on. So if I extend this out further, right, we could see that right now we are coming in for a retest. There's that yellow line right there. Let me go ahead and clean that up. I'm going to come down, though, to the 2-hour time frame so I could get pretty precise with what's going on over here. All right. I'm going to jump in. I'm just going to extend that out and then extend it out clean. And thus far, we've broken up above that resistance, right? And then right now, you see the quick wick into it, that broken resistance, touches support, and now we're coming in again, and that broken resistance is being tested again. It's very clean, it's very clear, and there we are. Again, S&P 500, we have similar but different. I'm zooming out just to get an idea of where we are and what's happening over here. And I'm looking over here where price was just finding that support before it rolled over. It's kind of where we're at right now. I'm going to leave this all the way down over here because it's a bigger area of resistance and should be bigger support if it's tested. But if I wanted to add a trillion lines to my chart, you could see this is the 2 hour. You could see that light line over there and currently where the market is. So that all looks clean and easily understood. Take a look at the dollar jump. Now, I'm kind of confused because the last we left off, oh, I'm sorry. This is my linear chart. Hold on 1 second. Just bear with me 1 second. I'm coming back to the Bitcoin. All right. And then just bear with me 1 second so I could get into today's charts. There we are. Because I was looking at the dollar. I was like, wait, those aren't the charts that we left off with yesterday. We had added these 2 lines yesterday, if you remember, during our session. And look what happened over since. We could see like the dollar was above this upper line over here when we added these in the session. And you could see that we had a perfect touch into that area of support. It's where the dollar found support and is now bouncing. So between you and me, do we need this line over here? This second line over here. And I could see that why we added it. And I could also see that, yep, I mean, as price hit that found support, it bounced into the second line and it was resistance coming back down, testing again, making a lower high before resuming up over there. And you could see if you were on a small time frame, you could see where your entry would have been, right? Find support, test into the resistance, come back down, makes the lower high, and that's the resumption up. You could see an entry taking place over there at 110.50 if you were looking to go long on dollars on a small time frame for a trade. We saw mean reversion take place. We called the mean reversion as price tested. Well, not really. We saw price testing that 14-year trend line, just made note of it, and then once price broke down the support over here, we were looking then for mean reversion. We hit the center of the channel over here. And again, just like yesterday, it's anyone's guess, or the way that I view it, on what happens next. We're kind of in the center of the channel. I feel like giving it more time. And also because of my awareness of what's coming up Friday, of what's coming up next week, we'll continue watching right over here. We're in a bit of no man's land, dead center in the channel. Thanks, George. I appreciate the love, the lots of love. And for all you being here, I enjoy taking a look at the markets with you all. High signal. Really glad that you are here and we are participating in this together. It's a beautiful thing going ahead together and analyzing and viewing the markets. So we wanted to look at the 10-year also this morning. 10-year up, headline 3%. And you could see that we're coming back in on the breakdown. And then it looks like it's potentially looking to even close above that trend line over there. I just want to make sure it's very clean, right? And it looks pretty clean over here. The line is drawn pretty clean over here. And it looks like today's close back above will have said that this is just a fade over here. And if that happens, that could be a liquidity grab. We'll be watching and watching closely where the close is today on the 10-year. Seems like a big deal to me. I'm wondering if also at the same time, watch what I'm going to do. I'm just exploring. I don't know what is the right thing to do here. But you see that line over there? Like, do you see why I'm doing it? Let me zoom in a little bit. Do you see why I'm doing it? And then you see the market is paying attention to that. I think that it would be silly for us not to keep it in there and continue to watch. And look, it's okay not to have like the perfect clarity of what's happening. Like, it's the markets. You understand that. You're trying to find out what the market is doing in real time and pay attention to it. That's all I'm doing over here. I think that I need a little bit of a different color perhaps in order to be able to go ahead and see the difference between the two. But we'll watch what happens together, and we'll see whether or not price today closes above or below the green line over here. This is an important trend line. You could see how the market has paid attention to it, but this is where the market deviated from it, right? Let me even change that to a dotted line or something. This is where the market deviated from it. And then you can see it paid attention over here as well. So we'll continue watching, trying our best to get this right. And then we are looking at, or we're going to take a look at what's going on in the equity markets. And again, just want to point out, we saw Stanley Druckenmiller. The guy is so humble, for sure, an absolute legend in the space. And the truth is that more than anyone, he's ready to pivot on a dime. He's not afraid to be wrong. He has no within himself, no need to prove to himself that he's right, meaning that he's very quick to take a loss and or change his mind. His current view right now, looking at these unprecedented times, he said the macro has never been so tough in his 40-year career. I mean, we echo that. We've been echoing that for the past 3 months or so, ever since June, that it's impossible to make a forecast 6 months into the future, a year into the future, or beyond that. I don't see how that's possible. And we've become very data dependent for good reason. And that's where we are. And he says, viewing the market as he sees it today, that it's possible that we're looking at the markets going sideways for a prolonged amount of time. Now, when we talk about markets going sideways, we're also talking about markets, right, within that sideways price action being able to go up and down and up and down and up and down. Yeah, I don't think that the markets are going to go sideways. And if you look at other periods, and we've looked at together the 1970s into the early 80s, during a period where inflation was very, very high, you saw the rates being rate cycle hikes rising and then being cut. And then because inflation came back quickly, them having to raise rates again and then lower them and again raise them and lower them. And the markets, why that was happening, was going up and down as well. And if we're entering into any period like that, I know I'm showing you 2000 instead of 2014, and reason being is because simply it took price 10 years, 11 years to go ahead and make a new all-time high during that period. For all intents and purposes, the markets were going sideways, and this is just a chart that is before me right now, so it makes it easier. I think you need to be prepared for everything. A lot of people, they set expectations off as if they're invested in the equity markets and in the indexes that they could have an expectation of 8% a year. Well, if the market comes off 50%, it's going to take you a long time to recover at 8% a year before you're back to zero. I don't really think that's a plan. I think that you really want to make sure that you have a better plan in place. Nevertheless, that's not the point. The point is this. Let's take a look at it. This is looking at the 3 phases of a bear market, and it looks like that we are right now entering the second phase of the bear market, the reflexive rebound. Now, I want to be very clear. We're going to look at this in both linear, and we're going to look at this in log, and I want to explain to you a couple of different things. But before we do, I don't in any way, shape, or form personally believe that because we saw in 2000, and let me see over here, this is this one over here in purple is 2000 to 2003, and you could see it took quite a while for the market to go ahead and bottom out. Let me go ahead and zoom in and be able to show you. It took the market almost 3 years to find a bottom off of in 2000. It took the market a lot sooner in 2008 to find a bottom, but where are we going with that, George? Let's rewind and start over. I don't in any way, shape, or form believe or think that because we saw in the last 20 years 2 bear markets, and both of those bear markets happen to have a similar form as have other bear markets, that currently where we are today means that we are going to follow the same or similar pattern. I do not believe that at all. All we're doing is preparing ourselves if we were to see some type of similar bear market occur. I don't know what happens from here. Again, these are unprecedented times, whether or not, first of all, we even get the liberty to enter into a few months of basically sideways price action. Would it make a lot of sense to you if we rose into November, right? And you could see over here, this would be right around the elections. Previous bear markets over the last 20 years did see at this particular point a rise. Would it make sense to you if we rose into the elections and then began to roll over end of the year? Yeah, it would make sense. Does that mean that we have to roll over if we are able to have some type of bear market rally occur, or that could continue for longer or even higher, even to new all-time highs? 100%. That 100%, as well as I want you to understand, because sometimes when people look at past behavior of markets, they take it for like a given that's what's going to happen. I don't want you to believe that for any second before we even get started. It's also possible that the floor falls out before we even get the opportunity to see if some type of bear market rally continues to form. That's number one. Number two, if you remember on this channel over here back in March 15th, as the Fed began to raise hikes, price over here. As price rose up over here, I put in a very important video out on the YouTube talking about what happens if the, I forget the title of the video. It had something to do with like stocks dumping, what levels to watch out for, where it was. And I talked about over here the low of March, right? And I extended that line. And I told you that if we broke below, watch out. We were looking at entering into the second, I called it at the time, the second phase of the bear market. Should have been like the confirmation of a bear market beginning. And that analysis was spot on. There's no question about it. Only there was a mistake. And the mistake was this. Let me jump over and take a look at the S&P 500 with you. Let me jump over to here so I could show you exactly what we were doing and how we were doing it, right? And I put out the video, and as I put out the video, I went like over there, and I showed you that if we go ahead as we were rallying and take out this low, be ready that we are entering into a bear market. Now, where it was wrong or what could have been done better, and this is where my own bias got in the way, because my bias at the time was that this rally was going to occur. By the way, this was during like max fear. The Ukraine invasion was beginning, the Fed getting ready to raise rates, and at this particular point in time, I was looking for a rally, and then I had a bias. And my bias was that this rally was going to extend out a little further, even towards May into June before rolling over. That's why when you're looking at things like past behavior, it could create a bias in you. And I don't want you to form a bias just because this happened in the past, think it's going to happen again. That's very dangerous. It's very fruitful to look at past behavior as investor behavior repeats itself over and over and over again for hundreds of years. But your bias could get in the way. My bias got in the way over here because I should have been able to. Let me go ahead and jump down. It's a 3-day time frame. It's a little big. Let me come back down to a daily time frame with you. I should have been able to, or the 8-hour where I like to be. I prefer the 8-hour a lot, right? I should have been able to, as the markets were rolling over, right? Good. Like whether I was looking at something like that, a steep sell impulse, something a little bit safer after the lower high. I should have been able to see where the markets were rolling over, because that's a lot better of a potential entry than all the way down over here, right? Nevertheless, right, that was spot on. I think that we're at a similar type place of awareness as we're looking at the markets, this bear market entering the next phase. The second phase after the sharp down is the reflexive rebound. Watch out to see, again, similar to the analysis that we looked at over here. If we take out those March lows, then we're entering the bear market. if we take out these lows that were just put in here this week over here in October, right? At that point, get ready for the next phase, which is the drawn out fundamental downtrend. That's when we start seeing a few different things. And by the way, we have earnings coming up. Earnings are going to make or break whether or not this reflexive rebound even has the opportunity to take place. If we start seeing earning misses and forward guidance coming out, the markets might not have even the opportunity for any type of what has been the second phase of this bear market and could roll over much quickly. Now, if those, once again, last quarter earnings did surprise the markets, if they do that again, that absolutely could give the opportunity here for a good old-fashioned end-of-the-year rally. And then as we move forward out, we might start seeing, because as those rate hikes, those front-ended rate hikes continue to grind down into the economy, again, if we start seeing oil prices rising back up, making new yearly highs, that's going to be something else grinding against the economy. High oil price generally leads to recession, right? And if we start seeing those things happening, you're going to start seeing layoffs, more layoffs occur. That's when the Fed is going to move towards not only pivoting to a pause. By the way, there are so many experts out there who don't understand that a Fed pivot is not cutting interest rates to zero and then restarting quantitative easing. A Fed pivot financially is when they move from a rate hiking cycle to a pause, in the same way that most of you will remember that what happened going back into November, the pivot was when they began the taper. The beginning of the tapering of the QE purchases, that was the pivot. The pivot was not all the way in March after they finished tapering and then began liftoff raising rates. So again, just some financial basics that a lot of people out there have a lot of difficulty with. I want to make sure that we are all dealing with not only what is correct, but the same terms indeed. Bringing us back over to here anyway, the low that we just put in is very important. If we take that low out, watch out. I think that we could skip the reflexive rebound area and be entering into the next phase, which is the sharp downturn. In the past, we saw in 2008, the markets come off 58%. In 2001, 2003, we saw the markets come off 51%. Again, if we break down further, just because the markets came off roughly 55% in the previous two bear markets, that does not mean that it's a given that we're going to be looking at the same. These are absolutely unprecedented times, and we can't get locked into one view one way or the other. But it is an important situational awareness point over here. As so far, if you were looking, and you could do this on the buy side as well, and you could find periods in time where you will see very close past behavior lining up to where we are right now and a recovery. Today, we're just doing it on the downside. And I just want you to be prepared in case we start seeing the next phase occur and that phase begins to mirror again what happened in the two previous bear markets, because a lot of people during this bear market rally will become quite emotionally tied and bullish. We don't want to do that. We want to remain neutral on both sides. We want to just be able to continue to analyze the markets in real time, watching things unfold, and do our best using our TA to stay on the right side. So whether or not that came across as smooth and polished as I wanted it to, I hope that either which way, it helps you get a little bit more clarity on what's going on. I know it does for myself, and just like similar to form into the March when we put out that video and how that was very helpful. Again, a breakdown below could signify that we are accelerating and skipping the next phase, or will be the second phase of the three stages of a bear market, and then accelerating towards the drown out fundamental downtrend. Again, right after this week's or next week's CPI, the market very quickly is going to be focusing all of its attention on earnings. If you remember, or if you've just begun participating in the markets since around 2020, Earnings did not matter. And if you remember the work that we were doing after the Fed went ahead and fired its bazooka, because prior to that, we used to focus on the calendar each and every session. After that, I said we don't even need to look at the calendar anymore. It's become irrelevant. That's the market is not going to. We're looking at a major fundamental shift from the Federal Reserve. It wasn't until June of this year that we became once again data dependent, and rightfully so. The data matters for what happens next as far as this current hiking cycle and when it potentially will end. We're a lot closer to the middle of the hiking cycle. Again, a Fed pivot is one of two things. We're not talking about, again, a lot of people like to fast forward to that point in time where the Fed is going to be expanding their balance sheet once again. I have no idea when it is. If you ask me, or if you want me to give my guess, it's at some point in, let's say rate cuts begin at some point in 2023. They first begin very slow, and then as the economy continues to deteriorate, then you start seeing rapid rate cuts to zero before the Fed could restart balance sheet expansion. So you're looking at sometime in like late 2023, sometime throughout 2024, or even later. It's very hard to make that type of assumption or guess. Now, it's entirely possible that the Fed is forced into balance sheet expansion without dropping rates to zero and restarting QE program a lot sooner. That happened in 2019, September 2019, when the Fed began expanding its balance sheet, right? It wasn't until 2020, after the global lockdowns, that we saw the major balance sheet expansion. Again, I think that people try to simplify or oversimplify and go from point A to C without moving through the hard part, the difficult part of point B. And it's not that black and white. It's very difficult, and that's where we are today. Let's take a look and continue to look at what's going on over here in the markets and see that how the markets are digesting this massive, let's say, news from OPEC. And interesting, as oil over here is spiking up now and then back down. You see why the no FOMO posture and waiting to get a better read of what happens, not only today, but in the days ahead, to see if we line something better up. Dollar's reaction so far is it coming into an area of local resistance. You could see this was resistance, and then over here support. So the next area, just like we put in yesterday, the little bit of supports down over here. Let's add this little bit of resistance, and let's do it like this, making this a solid line, and then moving this it was yellow, right? So I think we should be looking at red resistance and green support to make it a little bit clearer for us. Right? And we are just, again, we're in no man's land. We got a big number coming out on Friday with the non-farm payroll. Even bigger next week with not only the Fed meeting minutes, where we get an insight to what they're planning behind closed doors, but the Thursday it is, right? Thursday CPI. And we will continue to see whether or not that trend continues. Where are you looking? I'm not on log on here. What chart was I on? The ALK 94, where you were looking at the log. Gold. We didn't take a look at gold and silver. Let's take a look and start with gold and look at that. Right into the trend line, right? Let me zoom out a little bit. I'm trying to figure out why there's a little bit of space over here, right? See all that space over there, and why my trend line was all the way up here. I have no idea. Because it wasn't until Thursday that we looked at this together. I might have to go back and watch Thursday's video to figure that out. Nevertheless, you could see it's kind of weird. I mean, for me, it's weird because I don't know why that trend line is all the way up there. Did I do that on log? There you go. Ah, why log? For that short time frame, the ALK. How about that? Look at that. Well, I don't know, but I mean, here the market was paying attention to the log. and definitely not the linear. That looks all weird, right? So I like to, but the truth is the ALK 94. The truth is I like to look at them both. And you could see over here on Bitcoin, I have one chart just for log, and then I have one just for linear because I like to pay attention to the both, and I feel more comfortable having multiple vantage points and views rather than just being locked into one. And I found that to be a lot more helpful. In this case, in this instance, I for whatever reason was on the log over here, and it makes a lot of sense, right? Let me go to auto, and it makes a lot of sense because that seems to be what the market is paying attention to. Taking off of the move into resistance, you're in a strong downtrend. I mean, an extreme downtrend over here, which is, I suppose, surprising for myself, as normally is when the Fed begins their hiking cycle, that is a pristine signal to buy gold. As the economy moves towards a slowdown, you start seeing growth and risk assets really come off, and gold normally performs really well. And up until the Fed actually expands their balance sheet again. In this particular, let's say, hiking cycle, the one main difference obviously has been the enormous inflation factor, and we're seeing something different take place. There's no question about it. But you could see that gold is in this massive downtrend into resistance. It wasn't just a touch of that trend line resistance. You could see over here, whoever took the short, by the way, beautiful, beautiful spot over there. You could see that area of horizontal resistance as well. And then price over here rolling over, being rejected. It offers a really good opportunity to take a short because you're taking that short with a really good risk reward. You're wrong if price rolls over and comes back above. And about where this goes, you have the first area of support all the way down over here. So it's much greater. It's a 1-to-2, much greater than 1-to-1 into that first area of take profit. And therefore, if price did go down towards that area of support, I would take a little bit more off that trade, maybe even 25%, and then continue to let that run. Price came back up and was rejected again lower on a lower high. Maybe even if it rolled over, add back to that position. And then this also gives us a very good, let's say, a very good idea of when we might actually be seeing gold have an actual trend change take place, right? We have that green line over there, resistance we came into. It coincided with the trend line resistance getting back above there. That would say or signify that might give the opportunity to go long. However, silver would be leading. My expectations is if that were to happen, as silver has been showing greater signs of life. And if we're seeing any type of bear market rally, I would expect silver to perform better. And you could see off this massive breakout, here's like similar to oil, why you don't want to FOMO. This is coming back down, but this is very healthy. We're coming back down now for a retest. This is a breakout, right? Coming in for a retest right now. And this gives the opportunity, if you're interested in going long on silver, again, it's counter trend. We're in a massive downtrend, but we saw some signs of this reversing. We then added in this pendant, right? And we broke to the upside of it. So we're watching over here as we come into this area of local support and this trend line. It's in this area over here between the two that if you got the opportunity for a retest and then resume out, to potentially take a really good entry on silver. And again, at the same time, sometimes these are massive liquidity grabs. Sometimes a break of a pendant to one side, if it then falls down below and breaks the support below, that could lead to a massive move down. So watch both sides over here, even though in the beginning or previously last week, you were inside a pendant waiting for the breakout one way or the other. The breakout's occurring to the upside. So right now you should be leaning towards any type of buy side opportunities. We don't take the breakout. In crypto, we take breakouts in bull markets. On any other instrument, we don't take a breakout. We wait for a retest and a resumption off. You're coming in for the retest now, but don't give up on the sell side as well. If we start to see a breakdown over here and then take out over here the pendant support, that could lead to a big move after a massive liquidity grab to the upside. We are a little bit light on likes. It's a pleasure being here with you all. But if you're on mobile and you want to go ahead and spread some love, share some love, take 1 second over here, hit the like button, and support the work that we do here together. What else are we looking at as we take a look at silver getting wrecked today? The Bitcoin, crypto off hard, and equity markets off very hard. But you have to also realize equity markets have also made one of the largest 2-day gains in recent history, right? Equity markets were up. I want to go ahead and just measure that a little bit just to give us an idea. Let me zoom in. This is looking at the NASDAQ, and we could see in 2 days we were up 7%, 7.2%. So seeing the equity markets come off now as they found that resistance, it's just normal behavior. There's not much else to say about it. I don't think that this current climate, as we're headed for so many big data points over the next week, calls for any type of overly bullish or bearish bias. I think that you want to be neutral and just show a lot of patience, right? Anyone who took the Bitcoin trade yesterday, that was a good trade to take. You had a nice technical breakout. Now you have to go ahead and as we come in for the retest, again, still very healthy, right? Expectations of what should be occurring. But again, whether or not this is able to find any type of support and then rebound off of it, or if it rolls over, it could be very telling for what happens. And just kind of like a heads up, again, it's possible that we don't get this bear market bounce over here, the reflexive rebound, and that we roll over a lot sooner. I'm prepared for both. So briefly, Charles, I don't know if it changes anything. Briefly, I was reading this morning that there's a new way that the numbers, I'm not sure. I defer you to the Zero Head article this morning where they give some insight to that. I don't think that it changes anything because I've always given much less precedent to the ADP numbers than to the non-farm payroll numbers. So I don't know. I don't give it any type of weight whatsoever. There are a certain degree of market participants who always believe that the ADP numbers are able to go ahead and forecast what the non-farm payroll numbers are going to be. I've never paid attention to them, so I can't really answer that at all. Charles, Craig, big shout out on the 2x speed. Right? That is definitely matcha speed. But Charles, good entry there. Smart entry on the gold sell as you came into that resistance. And then again, what's really neat is that it gives you the opportunity, if you do see that faded, to kind of trade both ways. Now, it does seem that silver has the edge over here. So playing gold on the sell side and silver on the buy side might make more sense. And I just want to take a look at the gold to silver cross briefly. And as I zoom out over here, again, I've pointed this out as we're seeing silver continue to run. This is not indicative of any type of, let's say, risk in the credit markets. Everything here, and I saw Luke was able to go ahead and show how the gold to silver cross is also offers a good proxy to when we might actually be seeing some type of crisis event on the horizon. But yeah, I don't know. Not much else to say there. So, friends, my family, thanks for being here this morning. Thanks for participating. I'm not sure. It's up in the air whether or not we will be going live tomorrow. I want you to have that expectation. For sure, we'll be going live on Friday either way, but I will alert you whether it's on both Twitter and through the YouTube community and the Telegram channel. I'll put out an announcement on the Telegram channel as well. If you want to get alerted when we go live here on YouTube, you could obviously hit the bell icon on YouTube. If you don't want to rely on YouTube, there's a Telegram broadcast channel in the description below, which will also get you alerted. I'm going to go ahead and prepare for our CTM only session, which starts in a couple of hours. I hope you all have a beautiful day. Thanks for being here, and I'll talk to you all soon.